This is Mac OS Ken.
I'll look at new iPhone numbers. Apple shares get a couple of boosts, and you can't keep the world out of app stores. It is Friday, the 16th of July, 2021. I'm Ken Ray, and this is news from Mac OS Ken, brought to you by yours truly and supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSCan. More good tidings for iPhone sales. Market Tracker Consumer Intelligence Research Partners, or CIRP, issued a press release Thursday with lots of good news for Apple. According to the CIRP survey, folks are trading in relatively recent smartphones for iPhone 12 and going high-end when they go. Mike Levin, CIRP partner and co-founder, is quoted in the release saying, "For the first time in many quarters, consumers traded in somewhat newer phones. We asked consumers about the age of their previous phone, and in the quarter we saw the share of phones that were 3 years old or greater decrease. In the quarter, it looks like iPhone buyers traded in fewer older phones and opted for more expensive iPhone models as they upgraded." So many moving parts. The whole of the iPhone 12 line accounted for 63% of iPhones sold last quarter, according to CIRP. Two ties of note for iPhone sales: iPhone 12 Pro Max and iPhone 11 tied for top-selling iPhone with a 23% share each of iPhone sales. iPhone 12 mini and iPhone XR tied for the bottom rung, each with a 5% share. As for the out with the not-so-old, CIRP says 37% of buyers in the June quarter had their previous phone for 2 years or less, while 30% of buyers had their previous phone for 3 years or more. In contrast, in the 12 months ending with the March 2021 quarter, 35% of buyers had their previous phone for 2 years or less, while 34% of buyers had their previous phone for 3 years or more. While the report doesn't say explicitly why that's the case, comments from CIRP's other founder may give an inkling. A quote from the firm's Josh Lowitz points to increased consumer spending and increased traffic to Apple stores in talking over the numbers. All of this bodes well for Apple's revenue. The release points out the shift to more expensive models, in particular to iPhone 12 Pro Max, helped increase U.S. weighted average retail price to $869 in the June 2021 quarter, up slightly compared to March 2021 and considerably higher than the year-ago June 2020 quarter. CIRP estimates that this time last year, the U.S. weighted average retail price for iPhone was just under $800. One wonders how the CIRP survey numbers will mesh with a Morgan Stanley missive. Philip Elmer-DeWitt's Apple 3.0 ran part of a note Thursday from Morgan Stanley analyst Katie Huberty. The analyst indicates that Apple shares were stifled in the June quarter. She says that was driven by regulatory headlines and concerns that a more evolutionary iPhone S cycle would extend iPhone replacement cycles and drive year-on-year revenue declines in fiscal year 2022. In the past month, though, Apple shares are up about $20. Huberty sees a few reasons for this. There's been a flight to quality big tech names like Apple, Amazon, Facebook, Google, and Microsoft, according to Huberty. That's led them to outperform the S&P 500 since early June. App Store growth accelerated in June, up over 17% versus June of 2020. And supply chain checks indicate that Apple is building more iPhones for this year's launch than it did for last year's. That, plus recent share gains, have her thinking that iPhone revenue can grow in fiscal year 22 and refutes the concerns of iPhone S-cycle declines. If there is any concern, it's that shares are running up so much right now, their performance after the iPhone 13 launch may look muted. Still, her note says, we are buyers heading into the iPhone 13 launch in September, where we see the combination of mature replacement cycles, increasing 5G adoption, improving retail store traffic, longer battery life and camera quality, and share gains against Huawei as drivers of iPhone outperformance relative to past S cycles. Huberty has an overweight rating on Apple shares. She used Thursday's note to up her price target on the shares from $162 to $166. Morgan Stanley wasn't the only firm to set higher Apple expectations on Thursday. Investors Business Daily raised its rating on the company's shares. Buy, strong buy, super bond buy. Life should be that simple. On Thursday, the piece says Apple received an upgrade to its relative strength rating from 67 to 74. Teasing a formula for which one might need a slide rule, Investors Business Daily did say, in simpler terms, in terms of fundamental health, Apple has posted rising earnings per share growth over the past 2 quarters. Revenue growth has also increased over the same time frame. It also led with the expectation that Apple is producing more iPhones for this year's launch than it did for last year's. By the site's reckoning, Apple stock holds the number 1 rank among its peers in the telecom consumer product industry group. This next story is only worth mentioning for the completionists. At one point on Thursday, Apple had a higher market valuation than the day before. On Wednesday, Apple shares got as high as $149.57. When they did, the Cupertino company crossed a line no publicly traded U.S. company had ever crossed before, hitting a market value of $2.5 trillion. Shares went higher on Thursday, hitting a new intraday high of $150, according to a piece from the Mac Observer. That would push the company's market cap even further past the $2.5 trillion line. Again, though, it could not hold that line. Shares ended the day down 67 cents to close at $148.48. That leaves the all things maker with a measly market value of $2.488 trillion. For years and years, Apple has said selling the best is more important than selling the most, or words to that effect. For now, though, they are also not selling the second most. TechCrunch has new numbers from market tracker Canalys. According to those, Xiaomi has pushed Apple a step down on the podium. According to the firm, Xiaomi saw June quarter growth of 83% year over year. Globally, the top 5 smartphone vendors now run Samsung in number 1 with a 19% global share. Xiaomi is second with a 17% share. Apple is third with a 14% share. Oppo and Vivo tie for 5th, each with a 10% share. Maybe they tie for 4th. Anyway, they round out the top 5. The rest of them, I assume, go into that great, big, lumpy, other category. As for being pushed into the bronze, no need to cry for Apple, of course. TechCrunch says Canalys cites aggressive pricing as a big factor in Xiaomi's success, particularly contrasted with premium-priced offerings from Samsung and Apple. Just because we're going outside doesn't mean we're staying out of the app stores. Apple Insider has new numbers from the application trackers at App Annie. According to those, global app spending reached $34 billion in the June quarter. That was up a whopping $7 billion from the same quarter a year ago. It also beat March quarter sales of about $32 billion. Looks like the last year has embedded some serious behaviors. According to Apple Insider, even as pandemic-era restrictions ease and vaccination rates climb on many parts of the globe, App Annie notes that consumer app habits are remaining fairly stable. In other words, people are spending just as much time in apps as they were during the height of the global health crisis. Apple's back-to-school promotions have expanded. Mac Rumors says the company on Thursday launched the latest promotion across most of Europe, as well as parts of Asia and the Middle East. Just like in Canada and the US, the piece says higher ed students and faculty can get a set of free AirPods with the purchase of select Macs and iPads. They can also pay to upgrade the AirPods to a pair with a wireless charging case or a pair of AirPods Pro. The offer is good for students and teachers with the purchase of a new MacBook Air, MacBook Pro, 24-inch iMac, Mac Pro, Mac Mini, M1 iPad Pro, and or an iPad Air. While refurbished machines are said by Apple to be good as new, they are not good enough for this deal. The promotion went live for well over 20 countries this week. The best way to find out if yours is one of them, go to Apple's site for your region and search the term back to school. If you're a veteran of the U.S. military or are still in active service, Apple's got a special offer for you. iLounge says the Cupertino company is offering new subscribers a 4-month free trial of Apple Music or a free month of the service if you're already subscribed. The offer ends on the 1st of August. ID.me verification is required. Eligible parties can read the fine print and get the offer at redeem.apple.com/veterans. I told you yesterday that Apple's put a Today at Apple session on its YouTube channel. It'll teach people how to draw themselves as characters from Peanuts. I said if you tried it, you should send it to me because I wanted to see it. I didn't think anybody would, but somebody did. And now, I want more. I would like to put you as a Peanuts character and me as a Peanuts character together in a picture. I have no idea why. Still, I think it might be fun. Look for the Today at Apple session on YouTube. Draw yourself as a Peanuts character, then send it to me. info@macoscan.com. We could be a Peanuts gang that'll seriously mess up the Peanuts gang. info@macoscan.com. I look forward to seeing your work. And finally today, news of another big deal for Apple TV Plus. Actually, are first look deals big deals for Apple or for the people who sign them? I guess it's symbiotic. Anyway, Deadline says HyperObject Industries has inked a multi-year first look deal with the Cupertino streamer. HyperObject Industries sounds like an app developer. It's actually the name of Adam McKay's production company. That is Oscar-winning writer, director, and producer Adam McKay, who used to make broad comedies like Anchorman and Talladega Nights, and now makes more socially relevant fare, according to Deadline. Stuff like The Big Short and Vice. As for what he'll do for Apple, Deadline says the plan is for McKay and team to generate projects that range from scripted comedies to dramas, horror, documentaries, documentary series, and good podcasts. McKay joins a pretty stellar group, not of podcasters. Yeah. Others with first look deals with Apple include Martin Scorsese's Sakelia Productions, Leonardo DiCaprio and Jennifer Davison's Appian Way, Idris Elba's Green Door Pictures, Ridley Scott's Scott Free, A24, Imagine Entertainment, and Skydance Animation. Coming up in a few minutes, an architect, a filmmaker, a NASA legend, and a podcaster walk into a restaurant. In a few minutes, wraps the week with Richard Gunther's dinner party. Pull up a chair. The show is called In a Few Minutes. Find it and listen wherever you find and listen to podcasts. macOS Ken, brought to you by me and supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/macosken. Advertising handled by Backbeat Media, online at backbeatmedia.com. You can reach me a couple of ways. info@macosken.com or call 716-780-4080. Until next time, that is news from macOS Ken. I'm Ken Ray.
Ciao.